already decided again and again and again, Hans, that, in fact, just yesterday, I don't know if you got to watch, but some of our guests were saying it's not about the economy. It's clearly not about the strength of the economy. It's about inflation. And you don't need signs that the economy is weakening, just that inflation is staying below the Fed's target, and that itself is enough to bring about a cut. You don't buy that?
Yeah. No, I don't. I mean, I think the inflation rate has been bouncing around the Fed target now for some time. So it'll run, 1.8% year over year, 2.2% year over year, but pretty stable. It's been pretty stably inside, a band around 2%. And if you are running a business, you can plan for that, right? You can plan with that. Roughly 2% inflation, if it maintains itself, is workable for corporate America. So I don't think that the Fed needs to react to a slight downtick in the rate of inflation.
And so what do you think is going on?
And then, of course,
what's going on with sovereigns? What are they indicating? And Fed funds futures. Why is everyone so certain? You're the only one that you feel in a position to just dispute all these other metrics?
Well, yeah, I'm like a voice crying in the wilderness, I guess. No, when you look at the data, things like the NIFIB survey, still very strong. Actually, earlier this week, that was a nice tick up in that. Hiring plans are still very good there. And even the employment number, Joe, when you look inside the numbers there, probably was more of a statistical fluke, right? Every roughly 10% of the time, you're going to have a number plus or minus 100,000 of the mark, and that's what happened last month. So in the totality of it, I think, without a doubt, the economy is slowing down a bit, but it's not slowing enough that necessitates a rate cut at this juncture. And I think that's probably going to be the surprise next month. That's what is not priced, is that they don't get that rate cut.
For the economy, you sound much more bullish than a lot of people have, so I guess that makes you really bullish on the stock market.
Yeah, well, I am bullish on certain sectors of the stock market. If you think about the market overall, I mean, we've talked about this before. I still think we're going to end this year somewhere between 2,750, 2,800. Good, that's the good news, up about 10% from where we started the year. But it's down from where we are right now, which means I think we're going to have a tough summer. Price is going to get pushed around because the impact of the tariffs, the policy uncertainty, which is at levels that we haven't seen since the depths of the financial crisis, all are going to start to have to get repriced into equities. So not as good as it has been of late, but still pretty good, a solid year overall.
Which sectors?
Sectors, defense, interestingly enough. I thought the Raytheon purchase, which, full disclosure, we own, was interesting. I think the news that was out this morning, I think, is indicative that the need to invest in defensive capabilities is going to remain pretty dire, if you will. So I think that area, while it's not cheap, represents a decent opportunity longer term. And then I think other opportunities that are presenting investors right now, this is probably a very non-consensus idea, which is the UK market. I think we are about to see them make a decision one way or another. Either they tumble out or they don't. And my guess, my bet is that it's not going to be anywhere near as bad as forecast, and that's going to present an opportunity for investors.
So no rate cuts in 2019. Is that what you're saying?
If there is going to be a rate cut, I don't think they need to do any cuts at this juncture.
But will there be? That's your view. But is your view there won't be any rate cuts in 2019?
I think that no rate cuts would be essentially, yes, I think that's right. If we get anything, it'll be in the back end of the year when it becomes painfully obvious that it is needed or not. I don't think it's going to be needed at this juncture.
And what's GDP going to run for the year, do you think? Just a ballpark.
Well, I would have said about 2.5%, somewhere between 2 and 2.5%. You're going to have to mark that down somewhere on the order of about 0.5% with the tariffs. just with China.
A whole half point comes off because of China?
Yeah, up to 0.4, 0.5. So get a half a year of that. Maybe it's a 0.2,
Okay.
20 basis points. If you put it on an annual run rate, it'd be about
That's
0.4,
close enough.
0.5.
All right, Hans, we got.